Hello everyone and welcome to another Elliott Wave analysis. Today I want to update on gold. Alright, so if you have been following me, you will know that I talk about gold short on the 25th of February. Right, so that's where I point out that it start off cycles with C, right? And then I talk about the three path that it could move down, right? Where there's this first target, second and third one. Okay, since then a goal has actually fell, right? Yes, it already fell and fell down to slightly below 5,000, and then it did a retracement up. Right, so I thought now is a good time to update, right? So over here you see um, the wave count, right? So over here I've placed this as a minor wave, right? So it means that this is part of wave C, first wave of wave C, right? And then this ABC itself is actually the second wave of wave C. So now we are actually going to the third wave of wave C down, okay? Right. So over here, this chart, I just wanted to do this live labeling with you. Right, so over here, what I can see is I can see this 1, 2, 3, 4, 5 as probably a leading diagonal, right? Then we have a wave 2, wave 3, right? Wave 3, wave 4, and finally this wave 5 also breaks down in 5 waves. So you see 1, 2, 3, 4, and 5. Now, is this the end of wave 5? Right, I think it could be, right? So this is based on, let's say I do this Fibonacci extension, right? And then I pull it all the way up across this entire wave, right? Firstly, we see that this wave stopped just slightly uh, above 1.618, right? So this, I don't really like it when it extended too much. So then we pull it down again and check against the fifth wave. Now, this relationship then shows you that wave 5 is equals to 0.786 of wave 1. Okay, so this is still acceptable, right? Because I believe wave 3 is extended. Yes, wave 3 is extended to in between the harmonic 1.414 and 1.618. Okay, so it is potentially the end of the first wave down, but this one will be off 1 degree lower. Okay, and then I'll put it as purple. Now, what to expect over here? Now, one important thing about this setup is this breakdown here. This breakdown, okay. So when there is a breakdown, then based on the measurement rule, right? At least we should see a 1:1, right, against the longest point of the neck of this neckline, right? I'm making use of this head and shoulders concept, right? And over here, so then it shows us that the target is here, 4,829. Of course, if you look at the longer time, you can refer back to my old one, but we are looking at the more short-term trading right now. So then we look at this 4827, right? And we found that nearby here there is a support at 4842, right? So then this becomes my target because I prefer to have a more conservative target. Okay, and then we look at this entire wave. Okay, wave 1. If this is a wave 1, then where would wave 3 likely be, right? So assume that it would short term it will rebound back because we have completed 5 wave. Short term it will rebound back, right? So over here, then I want to introduce what this technique about how much the retracement will be, right? So other than using Fibonacci retracement itself, sometimes if I want to do a 1:1, then I will actually pull it up, right? And then this tells me that there is a chance that if this is the bottom, right, it will move up here before it comes down, right? So over here, when I do this analysis, I also check whether there are previous resistance, right? So let me just put this correctly. Okay, so previous resistance, like the previous wave 4 provides a, a place of resistance, right? So in Elliott wave, we will also say that likely retracement likely will goes back to the previous wave 4, right? So um, that means this entire region here. Okay, so and up to here usually is where we want to short. Why? Because over here you can see this relationship where it's a bottom of wave 1 providing the resistance, right? And then you have the tip of wave 4 also providing the same resistance, right? So then if it move up here, right, what is going to happen? When we look at whether this is still matching any of our targets. Okay, so over here is not so nice, right? So what I would say then is likely there is a chance that it may fall a little bit further. Okay, even breaching this the previous entire wave down to bottom, right? So there is a chance that this go have not completed the fifth wave, right? So then you will have a retracement and then comes down. Okay, right. So the traditional analysis is that you will actually go up here. So depending on the strength of this so-called crash, right? We will the retracement may be shallow. Okay, that's what I'm trying to say. Uh, so over here, how would I trade then? Right. So I will only trade one direction, which is short. Okay. So if I assume that I enter here, right? I would say that you can use this previous what do you call that? You can use this bottom of wave 3, and here you can see some resistance, right? And do stop loss here, right? Even though actually this is actually a more ideal place to enter the short. Okay, but we want to try the breakdown. Okay, so this is what we will do. Right, so what happens if you stop up? Then the next place to actually try will likely be here. Okay, then you can have a better risk reward. Right, and use this as the same target. Okay, so I just put this. I expect this if there's any kind of a retracement to be fast. Okay, so I'll just leave it like this here. So this is the short-term trading strategy, right? So over here at any point in time, right? Another entry point is when it breaks down again. So if it moves back up and this trend line doesn't hold, right? The next time, and let's say it doesn't move up to wave 4, the next time that you will short this is when it breaks down from this trend line. Okay, the target will be the same because there is one support over here. So then we will close out the trade over here. But remember that if we zoom out, right, this is only a short-term target, right? Longer-term target is actually still at 4,400. Okay, so that's it for the analysis of gold today, and good luck in your trading. Thank you.